This is the question that can get the entire hobby fired up, and for a really good reason. With all the money flooding the market these days, you have to wonder, are sports cards actual investments, or are they still just a hobby at heart? It really all starts with headlines like this one. Back in 2022, a single 1952 Mickey Mantle card sold for a totally mind-boggling $12.6 million. When a number that huge hits the news, it's pretty much impossible not to stop and pay attention. And then you start seeing comparisons like this, right? They often come from the big auction houses, and they frame cards as a totally legitimate asset class. They're pointing to these gigantic outlier sales, and it creates this massive sense of FOMO, that fear of missing out on the next huge payday. So that brings us right to the million-dollar question. And sometimes it's literally a million-dollar question. What are we supposed to make of these little pieces of cardboard? Are they a serious place to park and grow your wealth, or is there something else going on here? Let's break it all down. First up, let's be fair and look at the investment side of the argument. And look, it's not just hype. There are some actual financial principles that people point to when they treat their collection like a full-on portfolio. The argument goes something like this. Cards can be a solid store of value, kind of like gold, holding their worth over time. They obviously offer huge potential for growth. They're a way to diversify your money outside of the usual stocks and bonds. And, when inflation is high, a lot of people see them as a way to protect against the value of their cash going down. And we've actually seen this play out. After that crazy pandemic boom, you saw a lot of the money kind of run for cover. People stopped gambling as much on unproven rookies and started pouring cash into the legends. The thinking is pretty simple. A Michael Jordan or a Babe Ruth card is a safer bet because, well, their legacies are already written in stone. But there's a whole other strategy happening at the same time. Some investors are totally ignoring the player and focusing purely on how rare the card is. They're hunting down those super scarce modern cards, the gold prisms numbered out of 10 or the one-of-one black finites. The bet here is that years from now, the absolute rarest cards will be what everyone wants, no matter whose face is on them. Okay, but, and this is a big but, here's where the whole narrative starts to shift. For all the talk about investing, sports cards have some huge structural problems that make them a totally different beast and way, way riskier than your typical assets. So the biggest, most critical problem is something called illiquidity. A card might have a value online, but that number is completely meaningless until you actually find someone willing to pay it. Unlike a stock you can sell with the click of a button, a card's value isn't real until you have the cash in your hand. I mean, when you put them side by side, the differences are just night and day. Stocks, instant liquidity, they have real value from company earnings, the fees are super low, and it's a highly regulated market. Sports cards are the exact opposite. They're slow to sell, their value is based entirely on hype, transaction costs are high, and the market is completely unregulated. It really is the Wild West. And that leads right into this other huge concept, intrinsic value. Right? Think about a stock in a company like Nike. Its value isn't just hype. It comes from their brand, their factories, their patents. They actually make stuff and sell it for a profit. A sports card, though, it doesn't generate any cash. Its value is 100% based on what the next person is willing to pay for it, which is all about sentiment and hype. And let's say you do find a buyer. Well, the hidden costs can just eat you alive. You've got grading fees, auction houses taking a 20% cut or even more, plus shipping and insurance. On top of that, the data tools we all use are only about 65% accurate, and the market is filled with shady stuff like shill bidding, where people secretly bid on their own items to pump up the price. This crazy up and down ride, it's not new at all. The sports card market is basically following a script that we've seen play out over and over again in other collectible markets. I mean, you don't have to look far. Just think back to the pandemic boom. According to eBay's data, Pokémon card sales shot up by 574% in just 1 year. Sports cards more than doubled. It was an absolute frenzy. But by 2023, a lot of those same cards had completely crashed, dropping anywhere from 30 to 70% from their peak once the hype died down. And this wasn't some one-off thing. This boom and bust cycle is what collectibles do. We saw it with comic books back in the early 90s, then the whole Beanie Babies meltdown in the late 90s, and even the sneaker resale market hit a wall just a few years back. Trading cards are really just the latest chapter in the same old story. So, when people point to that $12 million mantle card as proof that cards are a great investment, Well, it's kind of like pointing to a lottery winner and saying that buying lottery tickets is a solid retirement plan. It just ignores the reality for pretty much everyone else. And that reality, it's pretty sobering. For an estimated 99% of all the sports cards out there, if you ask, is this an investment? The answer is almost certainly a hard no. They are what they are, highly speculative, very illiquid collectibles.
So, where does that leave us? What's the right way to approach all this? Well, it's about shifting your mindset, moving from being a speculator to being a collector. It's about seeing cards as a passion asset.
So what's a passion asset? It's simple, really. It's something you buy first and foremost because you just love it. It brings you joy. Now, if it happens to go up in value down the road, that's an amazing bonus, but it's not the main reason you bought it. You're not banking your retirement on it, which makes the hobby so much healthier and, frankly, a lot more fun.
So, what does that actually look like? Well, first, collect what you genuinely enjoy. Go after your favorite players, your team, that set you loved as a kid. Second, go in with your eyes wide open. About the risks. Know that it's volatile. Third, manage your expectations. This is a hobby. It's not your 401k. And finally, just enjoy the hunt. Remember that the real value is in the joy of collecting itself.
In the end, it really all boils down to one simple question you have to ask yourself. Are you building a collection, or are you trying to build capital? Because how you answer that question, it changes everything. Your approach, the stress you feel, and the enjoyment you get out of it. The choice is yours.